no one is saying, the bottom is in. A lot of investors are expecting more volatility ahead.
Inflation, we're not done with it yet, and we should be prepared for some surprises and potentially negative surprises.
The U.S. Consumer Price Index is set to release its next report soon, and many experts are predicting that it will be very bad. In this video, I'm going to cover Chamath Palihapitiya, as he recently discussed inflation, the Fed's interest rate, and the state of the economy. So if you want to understand Chamath's viewpoint on why all this is happening in the market right now, and if we have reached the bottom or not, stay tuned till the end of the video. And if you're new to the channel, go hit that subscribe and bell icon. Now buckle up your seatbelt as we start with the end of the last great financial crisis, along with Chamath.
The thing that you have to do before you talk about what is happening now, I think it's probably useful to go back, and you have to really start at the end of the great financial crisis. And the reason is there was a bunch of people coming out of the GFC who confused what the US government and some European governments were doing. At the time, there was the risk of a huge financial contagion. And so the US stepped in and the Federal Reserve started to use their balance sheet to buy toxic assets, right? And the ECB did that, and I think Japan did that as well. Anyways, a bunch of banks did it. A bunch of governments did it. And then there was this body of pseudoscientific economists who coined this thing called modern monetary theory, which basically said, hey, you can keep printing money and introducing it into the economy to smooth things out and to actually drive long-term growth. And it turns out that a bunch of government officials fell for it. And if you fast forward to 2022, so 14 years later, governments around the world had printed something to the tune of about 35 odd trillion dollars of money into the economy that should have never been there. So the thing to remember is we have not necessarily just been obfuscating true supply demand in the last 6 or 8 months when we've been talking about a recession or inflation. We've been actually doing it since 2008. It's just that it's been building up in the system.
The Great Recession was a great time of economic uncertainty. According to Chamath, in the wake of the financial crisis, many people were confused about what the governments of the United States and Europe were doing. He further explains what these two governments pursued in response to the crisis. So, when crisis hit in 2008, there was a risk of huge financial contagion. The U.S. stepped in, and the Federal Reserve started to use their balance sheet to help stabilize the markets. They started printing money, which they believed will smooth out the economy. This policy was successful in preventing a full-blown financial crisis, but it came at a cost. But all this got carried away to 2022, and he explains that cost is what we're facing right now. He would have been talking about inflation and recession lately. But according to him, both of these concepts have been here for economic uncertainty in the world since 2008. So, have we reached the bottom, or more downtrend is waiting ahead? To know more, stay tuned. Also give this video a big thumbs up before going on ahead.
So one of the things that we have to realize is that all of that money somehow needs to get destroyed in some way, shape, or form if the true economic equilibrium is meant to be found. What is true supply? What is true demand in the absence of government sloshing money around, trying to prop up things that should not be propped up, or buying votes, or all the grifts that these folks have engaged in the last, decade and a half have to get undone. So that's the backdrop. So if you think about taking $30 trillion out of the global economy, you're talking about almost, I think it's 85 trillion is the world GDP. So it's almost half of an entire year's worth of global GDP. It's going to take 3 years probably of the slow, meticulous, running off of money, not reintroducing new money. So it seems like we're at the beginning of something that's going to be long and drawn out. Now that's separate from whether we're in a recession or not. That's just the bear market that we're in, right? And so you have to look at asset prices today as a microcosm of a much larger trend that has to be about fake money pushing asset prices up, and now taking all that fake money out and finding out what the real price of something is. And I just don't think that takes 6 months. So for all the people that were, fingers crossed, hoping that this would be the end of it, Fed raises 75, we're done with this, they're going to raise 75 more. I just think that's not how it's probably going to be. It's going to take, 24, 36 months. That may mean the bottom doesn't happen for another 18 months. So I think we're in for a lot of choppy market action.
Chamath suggests that in order to have a true economic equilibrium, money needs to be destroyed in some way, shape, or form. This may seem like a counterintuitive idea, but it is essential in order to avoid inflation and ensure the economy remains stable. This is because if there is too much money in circulation, it will eventually lose its value. The world GDP right now is 80 trillion, and there's about 30 trillion extra dollars in the global economy. And according to him, it will take around 3 years to take all those dollars out of the economy. Many people and analysts are saying that the market can bounce back in 6 months or a year, but he strongly advises that's not going to happen anytime soon. According to him, in his words, we're at the beginning of something that's going to be long and drawn out.
I think we have to also be sensitive to the fact that the Fed operates on a certain class of data, and that data in the 21st century is pretty pathetic. There was an article, I think it was in the New York Times, that really walked through how CPI is calculated. And it's a bunch of people that work for the government that walk around with iPads, building relationships with local businesses in all these random places all around the country and asking them to, chit chat for 15 minutes and do these surveys. Now, you would have thought that in 2023 or 2022, what the government would have said to, Visa, MasterCard, American Express, all the payment rails, the banks and Stripe is, send me a feed in the following structured way so that I can actually have an absolute precise sense of inflation, because inflation really only occurs when a good or a service trades hands for money, right? And you calculate what did that thing trade at the day before and what does it trade for today? So you could get an absolute precise sense of it. Instead, we do this random sampling thing. I think you need to buckle your seatbelt because the next 3, 4, 5 months of CPI will probably be very, very bad.
Inflation has been on the rise in recent months. With the release of the next CPI report, it is expected to continue to rise. And with the increase in inflation, interest rates are obviously going to increase as well. Even Powell had told the same in his recent testimony. Powell explains that the Fed is not trying to engineer a recession to stop inflation, but bringing down inflation is the #1 priority, even if doing so risks an economic downturn. But bringing down inflation is #1 priority. This could have serious implications for the economy. In conclusion, Chamath Palihapitiya warns the next few months are likely to be difficult for many people. CPI will probably be very high, and everyone should be prepared as we have not seen the bottom of the market yet. I would love to hear your thoughts on this matter in the comments section below. Thank you for watching. Be sure to subscribe to my channel to stay up to date and hit the like button if you found this video helpful. I'll see you in my next video. Adios.